Okay, so here's our broader market update. August 26th, it's about 8 o'clock, more or less. And we had a really bearish day today. I think the indices were down more than 3%. The major ones, S&P 500, small caps, NASDAQ. And we had a failed we had a failed daily swing low. So a swing low that looked like it was our daily cycle low, and it failed, and it's this swing low here, right? So I called this out on Twitter. It looked like we got our daily cycle low, and then we got a fail, right? Like, and I'll just draw that level here and I'll get rid of it. But like, right, like just to be crystal clear, right? Once we went below that level, that 41, I think that level was actually 41.12. That was your low, or what is that? Or 41.19, right? So right around there. So once we cut below that, that's no longer your daily cycle low. The daily cycle decline continues. So this actually puts us in a little bit of a complex area to some degree, but so because we're now pretty late in the daily cycle, right? But you had like this really bearish cycle that bottomed on day 50. Well, actually, then you kind of lost it. So like this whole cycle lasted 54 days, trading days. These are always trading days. So we could easily see, more downside and then finally get a bounce. Monday would be day 49. So, but, this is why multiple time frame analysis is so important. Let's focus on the weekly chart. But before we do that, just look at how this candle, like we just wipe out these 2 days like it were nothing. I mean, and this candle was very bullish, right? Yesterday's candle was very bullish. It got completely wiped out. This is an important signal, right? And what I didn't say at the top, the I had mentioned in a previous video. Again, you'll always see a description in the link. And I also sent out a sort of a post to the channel. I wasn't able to do a video earlier today, and it didn't do one last night. But basically, this is a really significant in the sense that we're most likely starting the weekly cycle decline now, right? And this was week 10, so Monday starts week 11. So we're relatively, like, it's not that late in the weekly cycle, and the weekly cycle decline has already started, which is another way of saying it's probably going to be left translated, right? And that means the declining phase lasts longer than the advancing phase. So if we advance for 9 weeks, then we could see a decline for at least 10 weeks from here. And so let's jump to that weekly chart. But again, that's just your cue. This huge red candle is a harbinger, right? Like, one of these things is not like the other. I mean, look at this candle versus all these other ones. I mean, like, I guess these are maybe matching each other a little bit, but like, remember this waterfall kind of decline? I suspect we might be in for something like this, right? Like, just like, look at these huge gaps just lower. So this is going to be a very interesting week next week. And again, we're close to a daily cycle low, so we'll have to be vigilant for the bounce. On the weekly level, again, so in that last video, I talked about how this, like think about how, or even like you think about last week, the way we closed, this is a very bearish close, and then we gapped down on when we opened. And the crazy thing is, we actually at one point, like we were green, like as of yesterday on the week. And then we had this huge bearish reversal after the the FOMC speech. I mean, Powell, and I'll put the speech in the link as well. And I know I focus on price action because price action is the reaction to the news to a large degree, whether it's early or not. And the point is, he said the Fed is like really aggressively committed to fighting inflation, and he specifically called out how there might be pain ahead. So it makes sense the market is reacting, and we may get a bounce in the next couple days, and that's what we were going to watch for closely, right? That, like, if we're getting something like, maybe we drip a little bit lower, then we get a bounce. We don't want to get sucked in by this. We want to be able to sell, that swing high, right? And again, we're not going to be able to predict when this is going to happen. we'll see it happen, and then maybe we can sell like right here so that we can catch this move down, right? That's how it works. And so that's the, like, if again, think about that. Like, this decline started on week 13, and then we got some relief on week 20, but it wasn't much. And then we declined all the way to week 16. I mean, we had this like intervening little rally. But like, so that's really the question. Is this whole rally going to get erased and we go on down and make new lows? That's what we're going to have to see. It obviously isn't going to happen in a straight line. We will probably get a bounce along the way. Again, like, even if it's something like that, you know, right? We can, something, you know, you can imagine. I mean, that's like a very vertical drop at the end. But it would seem like, and let's move on to the monthly chart, because I think that's probably the most important. I mean, look how incredibly bearish this is setting up, right? And if you imagine we don't get a violent bullish reversal in the next few days, right? Think about that. We're going to have a new monthly candle open on next Thursday. So we're setting up for a situation where at best we get an inside month for September that opens, but it's still going to be at the lower end of the range. And I talked about this in my last video. Like, having an inside month but at the higher end of the range is helpful because that gets you closer to making a new high. Now we're closer to making a new low and basically continuing the downtrend on the monthly chart, right? This becomes your new lower high, right? Like, we're at risk of doing, you know, like we did this, right? It was like, you can kind of think of it like basically that, you know, like, or, I mean, this is, you know, assuming here, like, you know, that's one potential path we can take down into the 3-year cycle low on a monthly level. And it's just crazy. This was such a bullish candle. It was nice, bright green, and now it's really sort of transformed. And that's why I still kept this at month 29, because month 27 is still a potential low. We could get a reversal, a violent reversal next week. Who knows? We'll see. It looks like the odds for that are low, but that would just tell you, again, so this is month 29. This is your lower high. And so you'd be playing for a lower low below this. So if nothing else, great sort of environment for, you know, like we have our next potential trending move if you're, you know, aggressive enough to short it. And Qs, same idea, different levels. So in this case, 42. So day 49 was Friday. So all these cycles are getting really long on a daily for sure. But we're still just kind of right in the middle of the weekly cycle. And so that's another important concept to understand. Basically, if we are in the start of the weekly cycle decline, there's probably going to be a couple of daily cycles of weekly cycle decline, which means we're going to have significant bounces along the way. Important to which will be important to kind of track in real time, which we'll definitely do on this channel. And it's really same idea on the weekly chart as SPX. Just different levels. And then if we look at the monthly, again, same idea. Now a sort of bearish shooter. And IWM, which is the bullish of all of them, the most bullish of all of them, I should say. And you can still see it right here, right? This is a monthly chart. You notice the big difference? This is still green, right? The other indices are now red, very bearish. I mean, this is still bearish. That upper wick, this is just on its way to turning red, right? Once we go below the open, which is 185.79, right? 185 and 79 cents, which, you know, that's a good sort of target to know that, to suspect that we'll get down there by next week, right? Turn this candle red the same way that the other indices are red. So that's the monthly chart. And the weekly, again, same idea. Week 9 top potentially here. We have our swing high, our bearish swing high becomes week 9. And we've probably started the weekly cycle decline. And same in this one. So 46, 7, 8, 9. Yeah, so day 49 as well. All of these did the same thing. They failed. The swing low failed. And that's an important concept. Both swing lows and swing highs fail, right? If you make a new high, the swing high fails. If you make a new low, the swing low fails, right? You have to be vigilant for that. That's what stops are for. And before I conclude, I'll quickly look at the dollar because of its sort of outsized impact on multiple asset classes, right? And so this is your daily chart. I mean, the dollar looked really, really bearish early in the morning, and that's why you have this long lower wick. It's such an important concept to understand, folks. This super long, and this is your daily chart. So we have a top on day 8. This is day 11, right? Or Friday was day 11, I should say. Monday will be day 12. This really long wick, you can see, and it's like it was below the 10-period moving average, the 10-day moving average in this case. It was a really ugly red candle at one point. It looked really bad. Now you can see it obviously closed as a really bullish hammer, and more importantly, a bullish outside candle. Again, I keep talking about this kind of concept. We made a new low, right? Clearly a new low. This candle is made a new low below this candle, right? This candle made a new low below this one. But it closed above the high of this candle. So really whipsawed people. After that FOMC, really hawkish talk from the Fed, the dollar just mooned. And so if we look at the weekly chart, this was week 12. Again, still, this has the appearance of a double top for sure. And so there are a lot of people that have a lot of bias, and this is certainly what they're seeing is a double top because that's what their bias tells them it is, right? But we're going to watch it objectively as we watch everything. And next week is starting week 13. That said, we're still kind of late in the weekly cycle. So, I mean, take that for what it's worth. We did just kind of check back to the 10-period moving average, 10-week moving average in this case. So we could be ripe for a move higher, especially if we're moving into a bearish phase in the stock market, right? So we get a daily cycle low that has a short bounce, and then we sort of resume the move. But most importantly, it's that 3-year cycle we're always watching for. In this case, the high so far was July month 18, but it looks like we're poised to make a new high here on month 19. And most likely get followed through in September. So you get another new high on month 20. You get the picture. If it's a 3-year cycle, 36 months is what you would think about as your low. And so month 18 is probably not our top. Although it looked like a really bearish candle in real time. I mean, look at this crazy upper wick, right? You're like, oh, wait, there's no way price gets through all of this supply, right? Like all these people that dumped like this, there's no way price gets through all that supply. Actually, it did, right? And I mean, it's still too early to tell. We haven't made a new high yet, per se, but so far, it's obviously caught a lot of people on the sort of offsides, if you will. And the last thing I'll look at is TLT because that is tracking the sort of interest rates. And it looks like we have a daily cycle low on day 46, which is August 24th. This thing is sort of acting like a safe haven a little bit now. Right, you can see these two really bullish candles, especially today when we had that huge dump from the market. This was a pretty green candle, obviously, and this was week 10 of the weekly cycle. And so what this suggests to me, so far this weekly cycle has a high on week 7. The last weekly cycle also topped on week 7, right? And so at this point, you would expect that we're at least going to test this area, but it's like, are we going to do something like that and then that, right? And then just continue to move lower? Or are we going to do something like that and then that, right? And then, so that's and we'll see, do we even get up there and test that level? And then B, if and when we do, how do we react? And that's kind of the theme of this, right? You react to the price action. You use the multiple time frames to your advantage to try to anticipate, get in early on a weekly move using the daily chart, get in early on a monthly move using the weekly and daily chart. You get the idea. So we'll be watching these things very closely, but it does look like we are starting our next trending move, and it is lower. But remember, you can make money off of that, so I wouldn't poo-poo it too much.